Welcome to the Economy and Politics Conversation. I'm Ottoabasi Abasiekong. This edition, the first for the year 2025, will discuss the 2025 outlook for Nigerian households. Joining me virtually for this conversation is Mr. Kalu Aja, a financial analyst. Happy New Year to you, and nice to have you on the program.
How you doing? Happy New Year. Let's hope it's going to be a better year than we had. But yeah, looking forward to it.
Yes, hope it's a better year for the Nigerian households. Let's begin by asking you your opening statement on how the Nigerian households navigated a challenging macroeconomic environment in 2024 and the expectations in 2025.
Gotcha. So, 2024 was a tough year for the Nigerian household. We saw costs go up. That was really driven by the energy prices. The removal subsidies caused prices to go up. Also, the dollar exchange rate, we depreciated the naira. So those two headwinds really affected consumption. Incomes didn't go up because the minimum wage was increased. Even though it was increased late. And that trickle-down effect has not happened. Even where it has happened, the cost side has been more than the revenue side for Nigerians. So I think where Nigerian household in 2024 came out battered. I don't think the household could say they were better off in 2024 than they were in 2023 because of just those increasing costs. I agree on a macro level that those reforms are necessary, but in the end, when you drill it down to the household are going to see what's in it for us. Do we see a light at the end of the tunnel? And that's where the problem is, that the consumer confidence to say that the economy is getting better is not really there. And if there's no consumer confidence, it affects how much people spend. And if there's no spending, it just it's sort of transiting to the economy not really going at its full capacity. That's what's going on in 2024. For 25, we have a larger budget, but it's also a deficit budget. We seem to have the Dangote refinery and other refineries now up and coming. We want to see the reduction in prices. If that can happen, that can release some spending or some cost hangs on the Nigerian household, allowing them to consume more. We hope that the insurgency can come down so food inflation can reduce, and that can also be the biggest paycheck increase to Nigerian households as well. So 2025 is hanging on a lot of things that if it did happen, would be a better year than 2024. But we're really coming off a bad year in 24, and we're hopeful that 25 is going to be better.
Yeah, Mr. Kalu, very clear point you've made. I mean, last year was like a cost of living crisis part two. We saw that in various countries across the world, like the US, UK, South Africa, India. Households really made their decisions at the polls. And, it's very important. If you cannot buy things in the groceries, if you cannot buy things in the supermarket, at the shops, and wherever, it's very important that people purchasing power is upgraded. And it's interesting that several companies and even governments, like you rightly said, minimum wage was increased. But again, the impact of the macroeconomic effects is the one that we must watch. What are the critical decisions households must take in 2025 from the area of investments, savings to wealth generation? It's something you're passionate about, something that you educate a lot, engaging on social media and even your articles and books. What should be critical decisions?
I think the main decision is going to be, should we consume or should we invest? Normally every economy is really driven by households saving. The household savings then allow the firms to borrow those savings and invest in the economy. But what you have in Nigeria is that the circular economy is no longer circular. Households are no longer consuming. Because they're not consuming, the firms, the SMEs, the factories that produce the goods that the household usually buy cannot have a market for those goods. It then has a knock-on effect that if the firms cannot sell, they cannot buy inputs, they cannot hire people. And of course, interest rates in Nigeria are very, very high. So even if you're an SME and you do have a market for your goods and services, it's difficult to borrow, pay for energy costs, and still be in business in Nigeria. So for the household, for the unit household in Nigeria, the problem becomes, should we consume or should we then invest money in the economy? And that's a big, big decision. If you have to worry about feeding and perhaps buying a new air conditioner, of course, feeding always wins, which then means that the economy is not consuming and there's no investment. And if you then roll up all those households into a larger household, you can see what Nigerian GDP seems to be, flat. There's no huge burst of activity down the line. And that's just it. The costs are too high. Cost of doing business remains high. Cost of food, and remember, food is 51% of the consumer price
Mm.
index. It's about 56% of what the average household spends, is still very, very high. So if those don't come down, then of course that your question is the decision point is going to be let's just eat and then we can pause the rest of the spending. And of course, that is going to be disastrous to any economy. Yeah.
Mm. Very, 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 very challenging indicator. Even apart from the feeding, transportation is a major cost driver, and also shelter and rent across the country is increasing. So, like you rightly said, it's really a time to take very tough decisions, weigh your options, and I hope that at least with what you've said, I just need to emphasize the emphasis on investing. If we're going to invest, what should
Hmm.
we invest in as the households? And also in terms of saving, it's quite challenging to save, but I will get to that. But let's look at investing.
Yeah, I think the biggest investment you can make in an environment like Nigeria is cost savings, right? If you can reduce your personal costs, that's 100% return on your capital. If you can reduce your borrowing, that's 100% return on your capital. So if you have 100 naira in Nigeria, it's really that you're going to spend 60 of that naira on just feeding. You haven't talked about rent or transportation. So the point is that your ability to deploy investments is very, very low. So what you've seen Nigerians do is to go into debt to consume. So there's consumption happening because the minimum wage hasn't gone up, but people are eating, people are going out in cars. So folks are going into debt, folks are borrowing advance of their incomes to consume today. So we're creating a fiscal hole down the line, in which means that if we don't get those revenues tomorrow, we might not pay down those debt. That's what you're seeing happening right now. So
Mm.
the investment in 2025 is going to be, listen, if you can't buy a stock or you can't buy a farmland or a building, you've got to really invest in skills, right? So it might not cost you a lot to learn a new degree, right? But if you want to go buy shares in the Nigerian stock exchange, the market is doing pretty well, but can you afford it? So you've got to really say, okay, what can I do today that can generate revenues for me tomorrow? That's really the way you want to look at it. It's not going to be I want to invest in the traditional way, like I see an opportunity in the stock market, on the real estate market. The guys that can do that will still do that. But for the average Nigerian that is maybe earning the million that has been depreciated by depreciation of the currency and the high cost, his options are very limited. So I would say
Mm.
don't stop to invest. And investing is really going to be investing in your skill sets to make yourself better marketable, investing in paying down debt, and investing in finding new ways that you can reduce the cost of your own personal, should we say, ecosystem. That's going to be 100% return on capital right there. We don't really look at sometimes. We look at it in terms of let's go invest. But if you can simply make your own cost, I see people doing inverter for power, solar power, things like that are a way of
Mm.
reducing the energy costs. People are having small garden farms to say, I want to even grow tomatoes in the garden. That's really going to be the way to get out of this sometimes, coming
Mm.
together. When we'll head together, we said about coming together to buy in bulk, to pay for things in advance. All those small economic tricks and finance tricks that we do, you've got to do that on the macro level now, and then hope that you can get through this tough period so that you're still there when the economy hopefully gets better, more or less.
Yeah. Yeah. And Mr. Kalu, in a high inflation environment, like you rightly said, 34.6%, how can households really even save and invest to diversify their
Mm,
income and tap into this generation generating opportunities? Because I
mm.
mean, not in the situation of Venezuela, which is quite outrageous, but how can we navigate that as households?
I mean, the first thing is not to be in cash because inflation would occur if you are holding cash and if you
Mm.
are the one that wants to pay a bill. So those two
Mm.
categories of people are going to suffer for inflation. If you are holding naira cash, whether in the bank, in your pocket, inflation is going to affect you, right? But if you're holding a Nigerian asset, whether it's rice, whether it's beans, whether it's property, whatever it is, it seems to be able to carry you through the depreciation or the fall in purchasing power of the naira. I mean, look at it. If you just have a bag of rice at home, that bag of rice, the value stays more or less
Yeah.
the same than holding
Mm.
naira. I'm just throwing that out there, right?
Yes.
And of course, number
Yes.
two is, yeah, if you are the one to pay a bill and the inflation is
Mm.
going up, then you're on the back foot. But if you can pay your bills in advance or ask people that listen, if you pay your rent in advance, then you're taking advantage of the inflation because now you are front loading that cost and then you are at the end of you are paying. So the person receiving from you is the one that's going to have an inflation cost. Again, this is just personal finance, but we can't avoid inflation. What we can
Mm.
do is to mitigate, the effects of
Different.
it. So
Yeah.
especially if you have 100,000, they are very right because MPR, the monetary policy rate, is so high. If you do
Mm.
a federal government savings bond with as low as 5,000 naira, they're giving you risk-free returns of say 11%, 13% for 5,000 naira. The banks are going to give you much more than that. I saw the other day of risk-free bonds, treasury bills on the federal government of Nigeria. Implicit yield 29%. The Nigerian stock market closed last year at about 37%. That's
27.
beating
27. Yes.
inflation. Yeah.
Mm.
So really, if you want to take that risk, I mean, the best performing stock in Nigeria, I think it was last year, was doing almost
Insurance.
800%. Sure, the
Mm.
insurance guy. So there are a few
Yeah.
pockets here and there where you can put money in and beat inflation, but not everyone has that knowledge. So I would say you want to reduce the gap between just holding cash and inflation, and that's by just making sure you're not keeping money where it's not at least giving you a double situation. And I've gone all the way from risk-free to the bank deposits to stock market. So along that spectrum, that's a pension market spectrum, there are places you can put money into to reduce the impact of you losing money. You just can't take the
Mm.
cash and leave it in the bank and not worry about the real returns. Over time, it's going to affect you. So again, commodities, different currencies, diversification is going to be your way. It's the strategy, not really the tactics that are important here. You've got to think that if I hold Naira for long or short term, at the end of the stick. If I have to pay, I'm at the end of the stick. So your strategy should be more like, I want to diversify and I want to push and pay for everything in advance, especially if they're in Naira. So that way you are sort of taking advantage of inflation and being at the other end, should we say, of the spectrum.
Yeah. Very, very clear thoughts from you. Now, let's look at policy steps. Now, we've seen that this administration is clearly, we may say seemingly, but it's clearly showing that it's more of economic liberalization. And of course, last year we lost the former Prime Minister of India, Professor Manmohan Singh, who was a big believer in economic liberalization, the reforms he did in India. But in Nigeria's case, they are very painful reforms. We've seen them in the downstream sector, oil and gas. It has dovetailed into the price of premium motor spirit fuel. Also, the reforms in the foreign exchange markets. We've also seen the impact, like you said, the position of the currency and electricity, also tariffs. We've seen the impact
Yeah.
on the old bands and all that. It's hitting hard on the households. They have to navigate this. Um, are you seeing that alignment in policy? Because in our 2 or 3 conversations we've had, you've always advocated that we should have alignment in policies. And Nigeria Economic Summit Group agrees with you. They say 2025, we need to see alignment between fiscal, monetary, even trade and social investments, particularly. You're big on social investment. Are you seeing that alignment? Because if that alignment is not really there, the relief to households becomes challenging. So reforms
Mm.
are good, but households are still going to be crying and saying that, look, we're not feeling the impact.
Yeah, that is true. I mean, if you look on paper, right, there's alignment on paper. Now, the reform Nigeria is pursuing is driven by the World Bank basically calling Nigeria out and saying, your budgets, this is not even this administration, even when we had President Buhari's budget, listen, you are right, having a budget that you can't afford. You are
Mm.
paying subsidies on PMS imports more than health education combined. You are subsidizing your currency, which is you you are net importer if you just look at it that way. So those two policies, they basically said you can't afford it. You can't afford a naira, 500 naira to $1. Neither can you afford PMS import subsidy. They were correct. It's always good to reform when you have something in the tank. If you go to your village house and you want to renovate it, you want to change the roof from a flat roof to a sloping roof, it's always good to do your renovation when you have money in the bank. There's not this reform. You are reforming your village house. You want to reform your economy. When you want to reform your economy and you want to remove subsidies, you know that costs are going to go up. So a forward-thinking government, this is the same party, right? From President Buhari to President Tinubu, the same party. They knew they won the election. So before they go into office, they had an economic team. Everyone knew that there was going to be economic reforms. The World Bank had been preaching it, and that meant subsidies would go away, and even the dollar would be right-sized. In his own policy statement before the election, he put it there. There's going to be reforms in the currency. We're going to depeg the naira, the way we are to spend money from the exchange rate mechanism that we have, the excess code. He put it there. The point I'm making is that they knew that if they increase the cost of PMS and they devalued naira, there will be economic pain driven by the cost to the people. But there seems to be no front running of palliatives. We're talking about CNG buses. I just saw the report now about the small buses that they've got for the airport. This is 2024 that the buses have come. So if they knew this was going to happen and they had said, okay, well, hey, company A, we're going to be in office in 6 months. We will give you this contract. Start to produce these buses. You can send those signals. We're coming to you. Start to produce these buses. Hey, you food manufacturer, Nigeria's largest import is wheat. When we increase the cost, wheat is going to go up by 300%. So we're going to place a bulk order for wheat. The government to place a bulk order for wheat that will come into Nigeria and then be processed. Same thing with paddy rice. So, hey, India, hey, Thailand, we're going to place a massive order for paddy rice. If they had done this and they increased the cost of PMS, they devalued the naira, and then you had this massive inflow of wheat, you had a massive inflow of paddy rice, you had the CNG buses coming in. You wouldn't have much of the issues you are seeing. People will say, well, things are tough, but I can get on the bus, food is not as expensive. You wouldn't have had a lot of this conversation that you're having. So that's the problem, the coordination of this policy that we see on paper. The president has a plan to import food duty-free. It's signed, it's delivered. He has a coordinating minister of the economy. The Nigerian customs that reports to the coordinating minister of the economy says we can't implement it. I'm just paraphrasing, we can't implement it. So as we speak, the president's own plan to bring in food duty-free has not occurred because his own government is unable to pass whether the customs, whatever, to get the food in. And this goes to what you're talking about. If you can't do that, if you can't promise duty-free food in your own government, no opposition. This is not, you're not going to National Assembly. You're not going to state governors. This is your ministry, your customs. If you can't bring in duty-free food in ministries and customs agencies that you control, then you see why the tax reform bill is stalling when you have to go externally to talk. So paper is good, but implementation has been very poor. I support the removal of the subsidies and the naira depreciation because we can't afford it. But then their implementation of these good policies has let everyone down. So when you go out and you say you're an economist and this is the good thing, people say, well, reforms have led to costs going up. So remember, PTF was a response to the increase of fuel cost in the past. Sure P was a response to increase of fuel cost in the past. So this is not our first rodeo. So what is the response today to the increase in fuel cost? You struggle to find something you can say, this is what we have done with the increase in fact that has happened because we have removed this cost. And that's the problem, really. The implementation is lacking. And we're not being critics. This is factual. So I hope just if the food thing can happen, then there will be less issues in the country.
Yeah, yeah. So very clearly, what you've said is that we just need to have a very clear pathway in implementing these reforms, especially the coordination part. Social investment is very important and it has to be transparent because we hear so much of amounts being rolled out, but we just need to see the impact. And like Riley said, the issue of the food import duty, the whole windows, it needs to be reworked between the Ministry of Finance and Customs. We need to have that coordination so that we can begin to see impact in the country. I also know that you've talked about us improving and attracting foreign direct investments, which is very important for the economy. So as we round up, just in 1 minute, what is very critical? From ProShare's standpoint, from economists like Dr. Ayo, we can no longer afford to play around this. It's time to securitize and financialize our national assets. For you, in 1 minute, what is key? FDI
The
is very
big
important for
thing,
the
of
country.
course, yeah, the big thing is still inflation. Look at the returns on the stock market. Nigerian stock market 37%, US stock market 26%. But when you factor in inflation, Nigeria has about 3% return, US has about 20% return. So inflation is sapping whatever effort Nigeria is making. So we've got to still fight inflation. Number two, we've got to get not just a foreign capital direct investment, even the local direct investment. There's money sitting around the banks that is not being deployed because cost of operation in Nigeria is still high. There's still no power supply. There's still no infrastructure to get goods around the country at a cheaper price. So even if we can have this policy that would allow the local folks to invest monies and get tax breaks, clear, direct, simple, before the foreign money comes in, let the local money go out and be deployed. You have cash, like we said. If you keep cash, it's not good. But if you can deploy that cash towards infrastructure and the government pays you back, it's a win for everyone. So inflation and then allowing the economy to work. Nigerians naturally entrepreneurs, allow them to be entrepreneurs. The government should pass the laws, sit back and then let the normal animal spirits of Nigerians take over and boom. That's what we need to do in 2025.
Yeah, very clear. We have to invest in skills as households. We have to watch our costs and also do a lot of cost management analysis as households so that we can be able to have enough to save and also look at other investment options. And then you rightly said it, the policies have to align and social investment is very critical to provide a way for households to mitigate the whole challenges. And of course, like you rightly said, we need domestic investments, foreign direct investments. And like the economists have said, if we have more of that inflow, it will boost our foreign reserve adequacy. That begins to even address issues around inflation. But in all, we're optimistic that this should be a great year for households. Nigerians are always resilient, and we are very hopeful for that. Thank you very much, Mr. Kalu Aja, for this very interesting insights on the outlook for households for 2025. We know that Nigerians are resilient, and we trust that the year will turn out great at the end. Thank you once again, Mr. Kalu Aja, financial analyst, for this interesting conversation. First edition of the 2025 Economy and Politics program. Thank you once again, and have a great year.
Yes. I will. Thank you. Same to you, my brother.
So our viewers, if you want to get further insights on this conversation, visit the ProShare website displayed on the screen and follow our social media platforms to engage further on this program. Until we come your way again, enrich yourself with knowledge of socio-economic developments around you. It is wise. I'm Ottoabasi Abasiekong. This is wishing you a refreshing 2025. Thank you for watching, and bye for now.